Now, to be a profitable long-term trader, you need to master your psychology, strategy, and risk management. Now, regardless of how much time you put in, I'm guaranteeing that in this video, there's gonna be at least one thing that's still gonna apply to you, and just fixing one thing can significantly make a huge impact on how you trade. That's why today I'm going through 100 different mistakes that you are probably still making. So stay tuned, because I can guarantee that at least one of these things is going to make an impact in how you trade. So let's start with the first one. So first, we're going to begin with the mindset and the psychology section. I think this is probably one of the most important when you actually categorize all three. This probably holds the most weight, I would say, and maybe risk management, then your strategy. So let's begin. So the first is trading without a clearly defined plan that is already set up. So this means that you know exactly what you're doing when this happens, this happens, this happens. Everything is extremely systematic and you know exactly what to do. Next is letting fear stop you from taking trades. This is self-explanatory. Most of us still face these things, especially if you've gone on a losing streak, you suddenly become afraid. Simple thing to fix this personally is just backtesting. See exactly how your strategy works and the results that it promises, and from there you're gonna gain your confidence back and you can get back to smashing it. Next is chasing price after you've been stopped out. This still happens, mostly beginners, and most importantly, this happens because you risk too much. So just reduce your risk, and generally you feel more comfortable when you lose, so you don't feel like chasing that profit again. And that takes us to getting emotional after you do lose or win, in fact, because when you do win, some people get excited. Maybe you put too much on the line, you made $500 today, and now you want to take another trade to try and make 1K. You want to be like a robot when you trade. I'm telling you, the moment you become so immune and robotic, you know you're doing something right, you're along the right path. Next is revenge trading to get even. This is similar to what I mentioned before. It's still the idea of revenge trading. Whether you took a loss, whether you're even a win, the idea is you don't want to chase the market. You want the market to come to you and you just follow. The most important thing is you just want to get a meat of whatever is happening in the market, and you hop out. That's how I trade. I'm in and out. I don't need to catch the beginning, I don't need to catch the end. I don't need to chase anything. I just kind of hop in and I'll hop out. And this moves us to trading with the mindset of trying to be right instead of trying to be profitable. A lot of us eventually gamify trading, which I understand why, but you need to always remember the main focus. You want to just trade not to be right, but just to make money. That's the aim of the game. Honestly, it's not about being right at all. The market can just prove you wrong, even if everything ticks the boxes. So you're just here to make money and bounce. Always remember that you're here to make money, not to be right, not to prove a point to anybody, not even to prove a point to yourself. Now, align one loss to affect your next trade. If you're still in this category, if you're still making those mistakes, I would say you're still kind of a bit of a rookie, because I mean, I get it, even some people that are already seasoned traders. Yes, sometimes your emotion is unstable, but generally one loss does not define anything. If you're a scalper like I am, we find trades pretty much every single day. Don't make one trade define your entire week. It's just one trade out of the many thousands that you're still going to take. And next we have an important one, which is getting paralyzed by overanalysis. This is for those who has too many confluences, too many ideas in your trades. You have to look at this, and what this results in is that all the different confluences just clash with each other and you just don't even know what to do. The 1 minute is telling you to sell, the 5 minutes telling you to buy, the 1 hour is telling you to sell, the 16 minutes is telling you it's consolidating. Everything is just a mess. You don't even know what to do at that point, and then you just become overwhelmed. So you want to simplify trading. The more simple it is, the better everything is. I can promise you that. Next is relying on hope instead of data. Data speaks. I promise you, if I was to mention that moment that some people tend to ask, it would be when I started to rely on data. Very, very clear. I remember it. It's just when I realized backtesting was a thing. As soon as I started to backtest a ton, it just changed the game for me, because one, it helps my confidence because I know what my strategy can do. I knew the data. I backtested for 1, 2, 3, 4 years now of like gathering data. So it builds your confidence. Don't trade on hope or faith. It's not about faith in this instance, honestly. Gather data, trust the system, and follow it. Now, still under the umbrella of psychology, many of us do compare ourselves to other traders. Don't do this. Different traders have been doing this for different amount of time. Some people have been cooking for 8 years, some people 5, some people 2. You might just be trading for 2 months and you think you know everything. Trust me, there's a lot more that you're gonna learn. The thing about trading, I realized personally, is when you are trading, you think you know everything, and then something happens, and then you think you know everything, and then there's more for you to know, and you just keep going through that cycle of improving 1% at a time. Don't compare yourself to those that have been doing this a long time. Next, we have refusing to admit when your zone has failed. I mean, the zone, this could be supply and demand, this could be support and resistance, whatever it is that you're doing. You need to understand that yes, there will be a time when it gets invalidated, when it failed, and just accepting it, right? Accepting the loss basically is the idea. A lot of us sometimes believe that though things, all the boxes are ticked, the trade should win. Sometimes all the boxes can be ticked, it just fails and you just move on. Like the L is the L, it's gonna happen, you can't avoid it. And next we have overconfidence. Whether you've been trading on a good day, bad day, good week, good month, never be overconfident. This is mistakes I've made myself. You can go on a very good streak, but now because I've backtested so much, I now have that experience to know that, trust me, just around the corner, the losing streak is always kind of there. Expect it to come, but just make sure you do very well when you're winning and let the losing streak kind of humble you, and you just kind of keep going that way. Always remain humble, never be confident, the market will deal with you. Next we have one that kind of grinds my gears because I hear this one a lot, and this is bias, in the sense that some people have this bias when they start trading or when they jump into the market, and that's all they just believe the market is going to do. So they don't pay attention to market structure because of this bias. Hey, make sure you're always paying attention to market structure, and make sure you're reading the higher highs, lower lows, because that is what the price is. You know, if price is forming higher highs, come on, you just know it's going up. It's very clear as day. Don't just have a bias that today is going to be a sell and price is showing you the opposite and you just keep trying to sell. And that takes us to letting FOMO override your rules. You know, trading is all about rules and regulations that you set for yourself. It's about a system that you put in place. And yes, FOMO is a thing. For those who don't know what FOMO means, this is fear of missing out. You know, you see a trade shooting up into the moon, you kind of you're missing the opportunity. You just enter a stupid entry point and it just gets crazy. Your stop loss is as wide as like my head sort of thing. You get what I'm saying. So don't let FOMO kind of just make you get, you know, frustrated and you just kind of forget everything. Make sure you become a robot. And also speaking about FOMO, there's also the other side of that, which is also trying to catch up. You feel like you're behind, you feel like a lot of people are printing money, you feel like your friends are funded, everyone's getting funded all over the gap, so you start to overtrade to try to catch up. You take 6 trades in a day just to print money, but trust me, it could be a bad day. Those days that you just overtrade is when you're gonna pack up your account. So again, trade the way you did when you got your data. If your data, you were taking 2 trades per day, take 2 trades per day. Don't take 16 trades just because, again, you fall behind in some kind of way. Or even if you feel behind in terms of income, whatever the case is, the time will come. All it takes is one account that can completely change your life, just one account. Next, we have not respecting your own risk. Of course, risk is now something else that we're going to dive into a lot more later on, but risk management or whatever risk that you are setting, respect it very, very well. It is there to make your account survive. It's like your health, but for your account. If you're just eating junk food, burgers, donuts, you are not really taking care of your health. It's the same way. If you're risking 2%, 5%, 16%, your account is just going to get packed up very, very soon. You're going to just die young, basically, in terms of like your account will die young. So respect the risk. Is there for a reason. I would say risk between 1 to 2%, 1% most of the time. Next, we have the mindset of thinking that more trades equals more profit. A lot of beginner traders technically fall into this trap. More trades does not mean more profit. Neither does, you know, more pips equals more profit necessarily. More of anything doesn't mean more money. I'll just say maybe bigger lot size, maybe, I don't know. But generally, you just need to know that more trades does not mean more money. Just focus on taking 1 to 2 trades. I would say that's a sweet spot. At max 3 trades. You don't ever need to really take that many. The way you trade anyway shouldn't really be providing that many opportunities in a day. Otherwise, the more you're exposed to trades, the quicker you can pack up your account, because the more trades you're taking, the more you're exposing your account, you know, health basically to the market, and you can just rack up losses, and that's going to lead to other issues and FOMO and, you know, overtrading, etc. And just the same way you think more trades equals more profit, it's the same way you should also remember that you shouldn't be thinking about your profits before you enter a trade in the first place. This is one that I also used to, and in a big mistake. Sometimes this still happens, but generally never ever think about the profits. Always think about the risk. It's a hard thing to instill, but you want to always focus on how much am I going to lose? How much am I going to lose? Lose. Think about the negative side of it. If you make money, congratulations. It's like, okay, that's a gift that the market is giving you. Next, we have trading impulsively without a confirmation. Just the same when you're planning your strategy, make sure you have a confirmation of entry. Make sure you wait for your confirmation as well. It's there for a reason. You know, you don't just set one for the sake of it. Wait for the confirmation and take it every single trade. And that takes us to being afraid to also adapt when the market changes. In the same way, though you have your confirmation, you have your strategy, you have your system, make sure that you also have some kind of, you're open to adapting when the market does, you know, move a certain way. Generally, I would trade, you know, one strategy, one time frame, one pair, one everything. But I do understand sometimes a pair is just moving, you know, sideways for 2 weeks. In that case, you need to be ready to adapt, find something maybe new. Your system is the same, but find a smart way to adapt if the market condition does change. That's how you need to be as a trader to actually succeed in this industry. If you're finding any value in this video so far, just drop a like. It's completely free. I really appreciate you guys for doing that. This video took a long time to make. We have a lot more to go through, and let's get into the more strategy-based things that you might be doing wrong at this point. Now, we have making your supply or demand zones too wide. This is for those specifically who maybe trade supply and demand like I do, or whatever strategy you trade, to be honest, whether it's supply and demand, support and resistance, invalid fair value gaps, whatever it is, whatever zone you draw, make sure it's not too wide, make sure it's also not too narrow. Some of us want to be so precise, you want to get the precise sniper entry, sniper exit, all of those sniper stuff. It doesn't mean anything. The aim of the game is to make money. That's all that really matters. So just make sure it's not too wide or too big. Make sure the size makes sense in terms of what you do, just according to the price action that you can see. Next, we have not distinguishing between old zones and new zones as well. This is obviously one that you need to practice. Old zones generally, if you're scalping especially, honestly, just take the fresh zones. I would say anything that is kind of outside of your screen or 2 hours ago, whatever the case is, if you're scalping. So by scalping, I mean 1 minute, 2 minute, 5 minute, those time frames, those are just generally too old. So you want to make sure you're taking the fresh zones. You want to make sure you're following recent price action. Now I'm going to do a quick fire maybe for the next few minutes, just so you guys can consume a lot more and hopefully pick up on 1-2 more things for those who are still watching. So trading zones that have already been mitigated, so this is just zones that have been tapped into. Make sure you never take these. They have a low probability of playing out because price is already tapped in there, all the volume is gone, all the buyers are bought, all the sellers have sold. Don't use zones that have been tapped into already. Next, we have ignoring fair value gaps. This is super important. I've made many videos on fair value gaps. Fair value gaps is super important. It plays a part in whatsoever strategy you're using. Go and watch that video. It's very useful. After this one, definitely recommend it. But make sure you do pay attention to fair value gaps. Entering a trade before price reacts to your zone. That one is just silly. Just wait for it to hit your zone. Not waiting for the confirmation of the candle before price hits your zone as well. So you have a confirmation of your, of entry. Make sure you do wait for that to happen as well. Don't get hit by FOMO because you see a sudden push in a particular direction and you want to enter super quick. Using zones in the wrong time frame of your strategy. If your strategy is based on the 2 minute, just take it on the 2 minute, 5 minute, take it on the 5 minute, unless you do top down analysis, but make sure you're using the zone according to your strategy. Ignoring high time frame zones or support or resistance, these can sometimes affect your take profit levels. They can cause an issue when you are in a trade, so keep an eye on zones or areas that can affect your take profit. Also ignoring high time frame zones and support that will affect your confluence as well as your TP, like I mentioned earlier. Trading zones are too close to each other. Sometimes wait for the zone that is maybe the latter one, because sometimes price will go there and prefers that zone instead. Not understanding the difference between a reaction and a reversal, taking trades in the middle of a range, drawing zones from the wrong candle and not from the original move that actually caused the reaction to happen. So with this, for example, supply and demand, you want to draw it from the initial pullback before the impulse move in that particular direction. Make sure you draw your zones correctly. It is super important, though it seems like just boxes on your screen. It's super important because this does tell you something about what happened in the market. I'm going to do another rush of another 10 for you guys so you can quickly absorb these as well. Not trading what you see on TradingView, ignoring supply and demand shifts based on market structure, failing to recognize zone invalidation, taking every zone you draw without quality filtering, using zones without confluence, like a break of structure, for example, not waiting for a break of structure before actually trusting a new zone or taking a new zone, forgetting to mark your break even level, not noticing when zones stack on each other and causing conflicts. So this is a very important one. Sometimes you'll see a supply on the 5 minute and a demand on the 5 minute. Usually when you see that, just expect some kind of conflict. It might consolidate for a little bit. The buyers are fighting, the sellers are fighting. One of them is going to win. So just accept that, okay, cool, you're taking a slightly higher risk on this trade. Something's going to happen and you just accept the risk. So always keep in mind when you see two different zones or two different kind of buyers and sellers beefing each other, because sometimes those setups do happen simultaneously, like in a short space of time. Next, we have ignoring the idea of fake outs. Fake outs happen, it happens to everybody. A lot of people kind of ask me all the time, how to avoid fake outs or pump fakes, like I like to call them. It happens, I'm telling you, no matter what time frame, even if you're trading the 1 hour, sometimes price will enter you in and just stop you out and then go your way. It's something everybody and your mom has to deal with. So just accept it. I guess you can reduce the probability, just kind of backtest this and make sure whatever strategy you trade is optimized as best as possible, but there is no avoiding it. It sometimes just happens. And some people do believe, okay, widening your stop loss will make it better. Yes, but always remember that the wider your stop loss, the longer it will take to take profit. So sometimes as well, you will then have the issue where price nearly hit your TP, but it retraces and stops you out. So, you know, there's both sides to it. I'm telling you, you just have to pick one and accept the risk that comes with one or the other. Moving on, we have believing every reaction means a reversal. That's pretty self-explanatory. Taking counter trend setup without accepting the risk. This is very important. Make sure you're taking trades 95% of the time that is with the trend. You just have a better opportunity of winning. But in some cases, if you can see price action showing you kind of a counter trend setup, you can take it, but sometimes the counter trend might stop at any time. You don't know when exactly that's gonna happen. It could happen when you now decide to take a buy or sell, but accept the risk that comes with counter trend setups. If it loses, just say fair enough, you know, it happens. Taking a buy and a sell at the same time, I'm not really sure why people generally do this. I know there's probably a strategy out there that requires you to take a buy and a sell, I don't know, but generally taking a buy and sell, I would generally avoid it. Drawing zones without an entry confirmation, yeah, never do this. Have an entry confirmation. Don't just enter based on I feel like. I don't think that's really sustainable. Not paying attention to how trading times affects your results. This is very important. You know, trading New York session is different from London. Trading London is different from Asia session. Trust me, you have different results. I've backtested this. One just doesn't do as good as the other. I generally don't trade Asia session as much. I haven't gathered enough data on it, but I just know that generally it's probably gonna perform worse based on how I trade. So do you understand how different sessions affect your trade, so you can understand how you want to risk if you're taking a trade in New York, or if you're trading a take, or if you're taking a trade, you know, at midnight Asia session, for example. Next, we have a super important one, which is trading the 1 minute chart and not understanding how tricky it is. You know, 1 minute is not for everybody. Yes, it happens quick. Yes, there's an adrenaline rush to it. Yes, you can make profit in like 2 seconds, but understand that sometimes it's just too quick for you. Not everyone can handle it. It's not for everybody. Understand what works for you. Do what you can do consistently and in a profitable manner with a peace of mind as well. If the 1 minute is making you rush and you're running around, it's probably not for you. Move on to maybe the 2 minute, 3 minute, 5 minutes, something higher that gives you time to breathe and calculate risk and all that stuff. Taking setups right before major news events. Most prop firms, most industries hate this anyway, but generally, unless you're someone who trades news and economical stuff, avoid news. News sometimes will do the opposite of whatever it's supposed to. Price action could be telling you to buy, it's shooting up like crazy. News happens, it just sells, you know, it takes you out. And the thing about news as well, it spreads usually kind of crazy. So instead of you to lose 1%, you could lose 2%. So generally, avoid trading news 97% of the time. Just don't do it, because it's not really, I mean, unless that's what you trade. Next, we have blindly trusting zones from other traders without any logic or understanding. Generally, that's why I hate the idea of copy trading, where, you know, they tell you buy, I'm entering at 2, 3, 1, 4 gold. You know, you don't even understand why, bro. You're just entering the trade because they said so. I'm not a fan of this. I always believe you want to learn how to trade. That's why, for example, Sellers Academy, we teach you how to trade. You need to make sure you know how to trade, and then you can take my trade as well, because I send them to you. But at least if I'm not there, you still understand what's going on. You understand exactly what I'm taking, what I'm doing, so that way you can trade independently. So always make sure whatever trades you're taking, whatever setups your mentors or you see online by any trader, understand why it is there. Don't just blindly take them. Next, we have not identifying liquidity grabs next to your zone, or after, you know, whatever zone, or after your sell happens. Liquidity grabs do play a part. You need a decent understanding of them at the bare minimum, because sometimes you might have a setup, liquidity grab happens, and that might just ruin your setup, because sometimes there's so much volume from liquidity grabs. You know, price action changes, all the buyers come in, you know, volume goes crazy. So sometimes keep an eye of where liquidity is, keep an eye of when price hits liquidity and just does a U-turn, because though your setup is good, liquidity grabs can affect that sometimes. Next, we have one that I generally don't do, which is re-entries. I generally don't do this. I haven't done this in a while, but re-entry in a trade, always remember that this is additional risk. I feel like some of us forget that re-entries is another risk being added onto your trade. So remember this always, that re-entry is more risk. Avoid them if you know it's not for you, because you can re-enter the trade and lose 2 trades in literally 1 minute. So always understand that if it's not for you and it always gets you frustrated, just never do it. Even if the trade looks very good, just don't do re-entries because it clearly affects your psychology. Next we have overusing, lower time frame zones that have already been mitigated, or just using lower time frame zones too much. Remember that lower time frame holds less weight than higher time frames, so using too many of them, understand the risk that you might have a 50% win rate. They might win and lose randomly, even if you're doing everything perfectly, because it's a high, it's a low time frame zone. It doesn't hold as much weight as a high time frame. Next, we have not noticing some pairs simply perform better than others. Yes, this is very, very true. Not all pairs are made the same. Personally, I've backtested so many. I know, for example, right now, I can say that GBP USD is my best pair in the sense that it wins more than others. Literally most of the time, it just wins more. It wins more than gold. It just has a higher win rate. It's more stable. It just performs how it should based on my strategy anyway. So not all pairs are the same. So you want to backtest different pairs according to your strategy and go with the best one that you see consistency with. Next, we have holding trades through zones without a clear invalidation. So as much as you have an entry, exit, take profits, all that stuff, do make sure you have an invalidation rule as well. And this is just when a trade is no longer playing how it should and the setup is no longer valid, basically. Like you don't take that setup anymore because it's no longer the setup that you're looking for. Have that rule in place as well. Next, we have taken trades that are formed during a low volume session. So this could be a setup that are formed in a session. Understand that as sometimes a low volume session, so it might not perform exactly how it would in New York session when there's news and a lot of volume. The reactions aren't always the same on these zones. Next, we have using zones without a clear risk reward ratio. Always make sure you have an RR ratio. This is straightforward. I don't even need to go into this at all. Next, we have forgetting to factor that session timings do affect your trades. It does affect your results in the sense that though you might be trading New York session, opening session is different from closing session. It's different from the middle of the session. So do you understand that within your session, different times in that session, do you perform differently? Hence why backtesting is so important, because when you backtest so much and you have so much data, you will find out that, okay, maybe I shouldn't trade in the first 10 minutes of my session because I just lose all the time. These are things you need to gather information on because they're not all equal. And next, we have forgetting the idea of time decay on zones. So what this means is that as time goes on, some zones just slowly wear out and it's not as fresh and powerful as it was beforehand, basically. So zones do get old, just as human beings do get old as well. So do not take an old zone or zones that's kind of been there for ages, because it's not going to react as well, just because time does affect these zones, basically. And next, we have getting stuck with a particular zone just because, again, you have this bias, or you're just holding too much onto this particular zone and you don't move on to new opportunities. You don't read price action. You don't realize that there's a fresh opportunity literally looking at you. So don't hold too much onto a particular setup. Always make sure you're not too tied down by bias. That term bias, honestly, I'm not a fan of it because it just seems like it does more damage than good. Okay, so we're getting there. Hopefully you found a ton of value. There's still a lot more for us to go through. We're gonna dive into risk management now. This is a very, very important topic. Let's get straight into it. If you are finding value so far, be sure to drop a like. I'll really appreciate it. And leave a comment of your favorite one so far, or one that at least you maybe didn't know. I really appreciate that, and I'll read the comments and definitely respond as well. All right, so we have risking more than 1%. This is industry standard, honestly. Risk 1% 95% of the time, 2% maybe sometimes, but I would say generally 1 to 2%. And all this does is it gives you more room for you to basically lose more if you need to. Let's just say you had a 10K account, a million account. If you're risking 1%, it gives you 100 trades basically to lose all your money. So it gives you room basically to make mistakes, because mistakes will happen. Even if you're a very, very professional trader, you will still make mistakes. It gives you room. So smaller risk, bigger capital, and you're good. Next, we have over leveraging, just due to missed profits. This is a hard one. This is one that many of you will still struggle with, after many years. Even the seasoned traders will probably still struggle with this. Sometimes you missed opportunities, you lost a trade, you want to make up for it, you're down to 3%. So your fourth trade, you're going to say, I'm going to slap on 3%, try and make that back with a 1-to-1. You lose that trade, now you're down 6%. It goes south after that, I'll be real. So, hey, this is a very dangerous one. Over risking just because you want to chase profits. Again, remember, you could lose the trade. Even if the trade looks very good, you could still lose. And next, we have trying to cut your losses early without enough experience. Some traders are very good at this, some people aren't. It's not for everybody. It requires a lot of experience to be able to cut your losses early. Though you might think, okay, this trade is done, you cut a loss and then it goes your way. and then the next time you see the same thing, you don't cut your loss, and now it stops you out. So you're just always gonna be battling with yourself. It's gonna be all over the place. So generally, you need a very good experience. Accept the risk the moment you enter the trade anyway. Just let it do its thing. If you lose, you lose. You win, you win. But if you are good enough, then fair enough. You can cut your losses. It will also help. And next, we have taking too many trades at once. This just isn't good. We already know this, so I don't need to go into that. So now we're gonna do a quick run through. We're gonna burst through another, let's say 10. So you guys can consume a ton of value as well in a short space of time. Okay, so we have not having a max daily drawdown limit, letting a small loss spiral into a big one, scaling your position size based on previous losses, ignoring things like fees, commissions, swaps. These will eat into your profit as well, always remember them. Not backtesting for at least 1 year of data, in my opinion. Now I've increased it. It just gives you a ton of confidence. Re-entering a failed trade from the same zone without any confirmation. Not walking away after a losing streak, relying too heavily on one pattern that you've noticed 2 minutes ago. I think this one, let me pause for a second. I need to touch on this. You notice a pattern 2 minutes ago, so for some reason you might have like an enlightening moment. You realize, oh, okay, price just shut down, there's a ton of fair value gaps above, it's gonna go up. You realize this and you're like, you know what, basically you just start taking that setup because you saw it play out once somewhere, and now you just do it. It doesn't make any sense. You have no data to back it up. You saw it happen once. You don't know all the risk that comes with it. So don't just do something based on something you realize, or you watch one YouTube video, you saw a guy do it, he won once. You have no idea if it's even a profitable strategy, and you just think, yeah, this is now the win and grow. Always backtest a ton. Always make sure you have a ton of data to support whatever you do. Let's continue. Doubling down to get out of drawdown. Trading larger after a win for the sake of trying to quickly make money because you feel really confident. Not having a plan if your psychology gets messed up. So this is super important. Yes, I'm telling you, even me, sometimes you go through this phase where things are just not clicking, your psychology is messed up. For me, my personal plan is, again, I go back to the drawing board, go back to my data, backtest a ton, and then I get that confidence again. Okay, cool, I'm not crazy, do this, and you'll make money consistently. That's my plan if my psychology gets a bit tricky. So make sure you have one as well if you just start losing the plot. Basically, have something that's going to bring you back to your A game. Okay, let's continue. So on to the next, starting your trading day without a clear plan. I might have touched on this already, but make sure you have a clear plan, a clear goal, meaning that you remember your take profit, your TP, your stop loss. You remember your system before you start the day. Very important. Ignoring news events. This is straightforward. Always check Forex Factory for when news is coming up, because you don't want to be in a trade, news happens, and that causes you to blow your account because you forgot to set a stop loss. That'll be a very, very big catastrophe. Failing to journal or review your trades regularly. This is going to make one of the biggest improvements for you, most definitely. Not trading sim account or backtesting, so you can actually test new confluences, test new strategies that you find, test new systems. Always make sure that you do backtest these before you add them onto your strategy to continue to improve. Trading without self-awareness or discipline. This is essential, because ultimately that's all it boils down to. Discipline is what's going to keep you consistent. Discipline is what's going to make you be profitable, because you follow the rules and the system that you have in place. Without that, you're going to continue to be in a cycle where you're just losing money over and over again. You're testing over and over again. You never make true progress. So hopefully this video has been very, very useful. Thank you guys for watching. Really appreciate it. Took a lot of time, so drop a like, and I'll see you guys in the next one. Peace.